Hi, welcome to round one review of the simulation. So we see, I call it round one, the simulation calls it Y-1, which I assume is year one. Let's look at the results for profits, net profits per team. And remember, your strategy, no matter what it is, should be leading to increasing profits. So in this game, what we're trying to do is we're trying to run a company where we're going to increase revenues and, more importantly, increase net profits. And we see a company here. This company did very well, surpassing 55 million in net profits, followed by this company at 54 million of net profits. And then we have a number of companies above the $45 million mark, which is excellent for the first round. And we have about 11 or so companies that did that, which is fantastic. Now we have 3 companies that are below expectations in profits. So they need to reassess their strategy for profits. If we look at points, and I'll go over how points are calculated in a minute, but we have those same companies that had the highest net profits also are achieving some of the higher points for the round. So these people are above here 700. Which is very good for the first round. And you'll see that the teams that did poorly in net profits also did poorly in points. Their points disappointed compared to the teams that did better in net profits. So since you're being scored on how many points you earn, cumulative points, you want to make sure that you are looking at your points and thinking about your points when you make your decisions. Okay. As far as stock price, we have a few companies above $15 per share. So these are our 4 stock price leaders. Why do stock prices go up? Well, when revenues and sales go up, stock and profits go up, stock price goes up. Also, when shares, the amount of outstanding shares is reduced, that can also push stock price per share up. So we have majority of the company is in this $11 to $13 range here, and these would be the laggers, people who are below $10. Sales per team, we have number 1 in sales would be SP Productions with 257 million in sales, and the bottom part would be 182 million. So you see a big diversity, a big change here in sales, and a lot of diversity as far as how each team scored their revenues. Now, so the decisions you make can greatly affect the amount of cars you sell. And the idea is to sell cars that are profitable. So it's not going to be, you don't win the simulation by having the most sales. You win the simulation by having the most profits. For example, if you had a chance to work at 2 different companies, one company had 5 billion in sales, another company had 1 billion in sales, which company would you choose? And the correct answer should be, well, I need more information. And then you find out that the company that has $5 billion in sales has $100 billion in losses. And the company with $1 billion in sales has $900 million in profits. So the correct answer is you would want to work for the company with $1 billion in sales and $900 million in profits. So because the other company is probably going to be bankrupt very soon. So sales aren't everything. So earnings per share just looks like the earnings divided by the outstanding shares. And again, this can be increased by increasing your overall earnings, but also by decreasing the amount of outstanding shares. Okay. And we see a big diversity here where some teams actually have lower earnings per share, which is very disappointing to investors when you have such a growth market that you do in the simulation. Think of the simulation sort of like the old gasoline company, powered car companies are going out of business, and a new crop of hybrid, electric, and hydrogen powered car companies are being developed. So there's a lot of growth potential moving forward. If we look at the overall performance charts here, we see that, again, Auto X is number 1 in total points, which is very good. And then, so anybody over, you want to score at least 400 points or higher each round. So anybody over 400 points, which most teams, most teams scored over 400 points. There were only 6 teams that scored below 400 points. Now, these 2 teams are close to 400, but these teams under 300, you got to really closely reevaluate your profits. You have to make sure your profit margins are going up. And we see profit margins. Our top companies are in the 50 percentile or higher, and then most companies are in the 40 percentile or higher. Remember, the company started at 40%. So if you're at 40% or lower, you're destroying profit margins, and investors hate that. And that's why you didn't earn as many points, and that's why your stock price didn't go anywhere. Okay. Okay, so that's the review so far. Let me pop over to, here's a game I'm running in the practice game. This is in year 3. So you're going to be working on year 2 next. So I'm going to sort of analyze at the end of year 2, this company, these are the results, so how you earn the points. So my year 1 results compared to my year 2 results, we look at the year-over-year change, which is a 38% increase. I earn 1 point of per percentage increase. So if I have a decrease, I lose some points in my year-over-year. So let's go down to my profit margins went up slightly. I only made 4 points on that. So I got to move my profit margins up more. My operating margins went up slightly, improved a little bit more than my gross. And you can refer back to your finance class if you want to know what any of these financial ratios are about or how they're calculated. I think the user manual also covers it. And so I destroyed, so my equity multiplier wasn't as good. My return on equity was lower. My earnings per share was higher by 47%. And my return on assets was lower. And this could be because when your return on assets and total asset turnover might be difficult to improve upon when you're building the company at first, because you're bringing in more assets. Your assets are growing faster than your sales, and that's why those might be negative. But that's okay, because you can't be a winner in every financial ratio category every round. Sometimes you have to make some strategic sacrifices to get where you're going. And my strategic sacrifices are investing in assets to get where I'm going. So in market capitalization, the total value of the company went from 168 million to 314 million, or almost 100% increase. My book value went up by 58%. That's just my assets minus liabilities divided by outstanding shares. And my forecasting was mixed. Usually with forecasting, I'm trying not to lose points. I'm not really going to make points if my forecasting is close to 100%. So here is just trying to not lose a lot of points. I'm never going to, once I have my forecasting on track, I'm probably never going to make a lot of points here. And my operational investments was 100%, over 100%, or 100% increase here. And I had a deficit. So that was unexpected, cost me 100 points. My score would have been 427 if I hadn't lost 100 points here, because I would have gained 100 points. So I would have been up to 400. So that's kind of not so great. So let's look at how I could review my results even more. If you go to the individual assessment, here we'll give you a star rating, a score, and a percentile rank, and information of how to improve it. And I can look at the charts, which is something we just did before, but I want to look at my performance chart. So this is going to be key to what I'm going to do next. So I'm going to go down here, and I'm going to go all the way to the bottom, because all these ones are pretty good, but the bottom one is the most important, where I'm going to see, okay, my sales versus actual. So my sales here, I met all my demand, and in my sedan, I did good, but my truck, I under forecasted greatly in my truck, and I under forecasted in my luxury vehicle. So that is bad. So I have to keep that into account, that the demand versus what I actually forecasted. I forecasted too low compared to the demand, so I need to keep an eye on that. Okay, so moving back up. I can go to the industry. I can see how did my competitors make their car? How did they do? What were their overall points, their total points? So I could look at that closely. And then I can move into my financials to review that. And then back into sales. So now I'm back in my next year, and I see I have my year 2. I'm technically ahead of the class. In the team competition, you're going into year 2. But here I'm going into year 3 in the practice game. So in year 3, I'm going to look at my customer. Notice my customer expectations have gone up. The importance factors, if they stay the same, so I can I want to build a better car than I did last round. But I also want to make sure I can improve upon my profits. So I am bringing my profits up by 7%, which is really good. So now if I look at my forecast, here's a big hint on how to forecast better. I'm going to go to the student manual, and I'm going to go down to see for year 3, what are the average sales going to be for year 3? So this just means average. This is not the highest amount, not the lowest amount. So I'm going to take this as a guide of where I should be. So I think my cars are a little bit better than average, so I'm going to forecast probably a little bit higher on these cars. So going back, I'm going to keep that in consideration and forecast a little bit higher, considering that I'm making a car that is better than what I had previously and higher profit margins. So I think it should be a good round. So here I'm only going up 2%, so I'm kind of scale back a little bit. Try to get that up to a little bit more respectable number. Okay, so that's a good mix here. And so then go to truck. And I'm going to try and, again, make a better car because customers are expecting more. Just like in the real world, the new models should be better than the older models. So I'm going to try and move that up a bit. Okay, so luxury. And again, I want to make a better car here. And you can see that sometimes I come under customer expectations, sometimes depending on the importance factor. So price, people really seem to care about low price when it comes to this luxury, which makes sense because who wants to drive a discount luxury car around? All right, so I still have okay, it's still up about 3. I like to be up at least try to closer to 4 percentage points, but I'm still, my profits are up, so I'm going to submit that. Then moving into marketing. Okay, so for the marketing area, I'm going to have to look at what I did the previous round, and again, tying it back to the user guide to see where things sell best for each round. I'm going to have to convert that into marketing. This takes a while, so I'm going to pause the video before I move on to production because it takes a while. When it comes to this demographic up here, this is not going to affect your sales in any way. It's part of the reflective observations if we're using that, but we're not using that for the winter class. So it doesn't matter if you change these or leave them the way they are. This won't affect your sales at all. But the money you spend in each category will affect it. Okay, now I'm on the production area. So I'm going to have to buy some additional production plants, but I don't want to buy more than I need. So, because that's a waste of money. And I'm going to increase my operational investments because this is how I'm able to keep competitive moving forward. And because I'm buying these production plants, actually I don't need a production plant here because I have enough cars revamping and reselling my current inventory. I have enough, so that will save me some money from having to purchase another production plant. And let's see, truck. I am going to need a new production plant here for my truck, and I want to increase my operational investments here. And finally, sedan. I'll need luxury. I'll need another production plant as well, so my capacity matches my forecast, so I can build all the cars I want to. I have 100% capacity utilization here, so my factories, I'm using them 100%, which is good. And let me increase my operational investments here, because these are what, if you don't reinvest in your company, you're not going to remain competitive or profitable. So let me submit my production information. And you'll notice that in production, one of the reasons I had that unexpected deficit, I didn't forecast to have a deficit, which cost me 200 points, is because I had this unsold inventory. So if I have unsold inventory, that's cars I didn't sell, profits I didn't make, and cash didn't develop, and that's why I had this unexpected deficit. last year. But this year I'm coming into a nice profit. So I think I'm gonna retire. Remember, I'm in year 3. So I'm gonna buy back some stock. And I'm gonna retire some debt just because I have some extra money here. Okay, so now I have a pretty solid surplus, which means I most likely won't run into a deficit. So let me finish the practice round. Okay, so now my score is 530 points, so much better. And you'll see here that I was able to increase my profit margins by gross, operational, and net, and I earned points there. And I earned points pretty much in every category. My forecasts were a little off because I did forecast a little high, but I still maintained to have a surplus. But it's only 15 million where I thought I was going to have 30, so I definitely have a lot of unsold inventory. But I'm happy with the 530 points, and I see here, yes, I have unsold inventory about 100 to 300 cars per vehicle, which or none in the luxury. So I'm happy with that. So this is just sort of an overview to give some hints and some suggestions on how to improve your round. So let's review. So for the team competition, you're competing against other live students in the team competition area. So you must review what they've done to try to outsmart their strategy and improve your score. Okay, remember this should be a fun game and you're competing head to head with other students. So enjoy, and I'll be back next time to review your year 2 decisions and results. Thank you. Take care.